Your credit score directly impacts your ability to get a loan and the rate and terms you pay for those loans. It also plays a role in things like your insurance rates, the amount of security deposit needed when you rent an apartment, and even your cell phone payment plan options. For as important as credit scores are for each of us, there is often confusion and misunderstanding on what makes up the 3-digit number. My name is Matt Olson, mortgage lender with Hills Bank and Trust Company, and I'm going to discuss what factors make up your credit score. There are 5 categories that make up your credit score: payment history, amounts owed, new credit, length of credit history, and credit mix. Each category has a different level of impact on your credit score, which is represented by the percentages. For example, payment history plays a large impact at 35%, whereas credit mix has a relatively low impact at 10%. Let me briefly describe each category. Payment history. How you have paid creditors in the past is often a good indicator of how you will pay in the future. Payment history, both good and bad, typically has the largest impact on your credit score, which is why it is so important to make timely payments. Amounts owed. Total amounts owed to creditors, number of accounts with balances, and the percentage owed in relation to your credit limit all play a role in your credit score. New credit. Number of new accounts, amount of recent credit inquiries, and the length of time since credit inquiries were made account for about 10% of your credit score. Even though credit inquiries impact your score, it's usually minimal. Additionally, when multiple lenders pull your score within a short period of time, it usually counts as just one inquiry. Length of credit history. Your credit score considers the age of your oldest and newest accounts, the average age of all accounts, and how long it's been since you've used them. Usually, the longer you have managed credit, the higher your credit score will be. Credit mix. Credit mix is the variety of credit account types that you have. Different types include credit cards, personal loans, store loans, and mortgage loans. You don't need to have all of these types of credit to have good credit, but people with installment loans and credit cards with good payment history tend to have higher scores. Thanks for watching my video. Feel free to leave comments or questions below. Now that you know what's in your credit score, check out my video on how lenders use the number in their decision making.